In my 7 years of trading, I've studied smart money concepts religiously, digging through many YouTube videos, courses, and mentorship, and as well as my own personal experience trading the forex markets. Now, I use smart money concepts to get funded with multiple different prop firms, getting payouts like these, and these. And to consolidate all my knowledge on smart money concepts for your consumption, I'll be starting a smart money concept series where I will cover all the strategies that I personally use in my smart money concepts strategies in depth. In this particular video, I will break down the mother of all concepts, regardless of what trading strategies that you use, market structure. So make sure to get comfortable, grab your coffee or tea, take down notes, and rewatch this video if needed to fully master this important concept. Now, let's get right into the details. Market structure is like a painting. It tells us a story of what the market is currently doing, whether price is going up or down. With that being said, there are two types of market structure: the bullish market structure and the bearish market structure. So let's start off with the bullish market structure. In theory, a bullish market structure is taught to you in a very nice uptrend drawing, like this, creating higher highs and higher lows. However, in reality, the markets are pretty random and the movement will not always be so clean. In reality, how it will actually look like is something like this. Price will pump up impulsively, come lower slowly before making its way higher. Now, each time a structural high is broken, we create a break of structure, otherwise known as a break of structure, a BOS. And when a new high is put in place, our higher low is then identified. This is called our swing low. By definition, this is the lowest point in price that caused the creation of a new higher high. Now, when we have a swing low and a swing high formed, price action that happens in between the 2 points is called internal structure. It is called internal structure as price isn't actively creating new swing highs or swing lows in the market, as it is either in the process of a pullback after an impulsive move or just consolidating within the range between the high and the low. It is important to note that after we see a break of structure higher, as seen in the diagram over here, we should expect a pullback on that time frame. On the bearish market structure, it is the opposite. In theory, you will see creations of lower highs and lower lows in the market in a very smooth fashion. But in reality, price will create internal structure within the price range to generate orders in order to move the market. Hence, your charts will look like this most of the time. When price breaks lower and creates a lower low, this is called a break of structure, otherwise known as a BOS. And when this happens, a new swing high is put in place, as the definition of a swing high is the highest point in price that caused the creation of a new lower low. The next thing I want to talk about is strong and weak highs or lows. A strong low is a low that caused a new high to be created, which is also known as your higher low. The reason why these lows are strong is because in an uptrend, these lows must be protected and cannot be broken in order for the market to keep going higher. As we know, for markets to be bullish, higher highs and high lows must be kept in order for the market to be bullish. Similarly, strong highs are highs that cause new lows to form, which is also known as your lower highs. These are commonly found in a downtrend where price is creating lower highs and lower lows. Reason for it being a strong high is due to the fact that the market needs to respect the previous high to continue bearish in a downtrend. Now, what are weak highs and lows? These are the highs in an uptrend and the lows in a downtrend. Think about it for a second. If the market is bullish, price will want to continue and break all the previous highs in order to sustain an uptrend. Similarly, if the market is bearish, price will want to continue and break all the previous lows in order to sustain a downtrend. Because these highs and lows will most likely break to continue the trend, they are classified as weak. It is important to note that for strong highs and lows, they are usually formed with a sharp move away from the specific price point, and they usually happen in larger candles. To trade with the trend, the goal for us traders is to catch trades near the higher low if you're looking for buys, and near the lower high if you're looking for sells. Now brings the question, what happens when these strong highs and lows break? This is when we have a change of trend or direction in the market. When price breaks the strong low in an uptrend, the most recent high created becomes a strong high. This is because the bullish expectation of higher lows has failed and a lower low has been created. This confirms that the market has shifted from a bullish market to a bearish market. Now, we expect price to continue to put in lower highs and lower lows in the market until a lower high breaks. When the most recent lower high has been broken, the most recent low that has been created will become a strong low, as this is the low that took out the strong high, indicating that bearish expectations of lower high has failed. And this newer high that has just been created confirms a bullish trend change. This means that we are now expecting the market to continue creating higher highs and higher lows to maintain in an uptrend direction. A common term that is used by SMC traders is the change of character. By definition, a change of character happens when a bullish market structure changes to a bearish market and vice versa. It is important to note that these usually happen a lot frequently within internal structure on the lower time frame. This is a very good concept to use as it signals when a price run may be finished and a pullback is starting. It also tells us when a pullback has finished and a new price run is potentially starting. As we can see here, price has created a bearish change of character, which signals to us that a bullish swing run may be over and a pullback is starting. As price comes lower, nearer to where the lower high is, price creates a bullish change of character, which indicates that this internal structure pullback is now aligned with the swing structure. This also tells us that the pullback may be over and a new swing run higher is starting. Do note that a change of character can give false signals sometimes. In this line drawing, you can see that price has created a change of character to signal a bearish pullback. However, shortly after the pullback, price created a bullish change of character. But price doesn't break the higher high just yet. Instead, it goes bullish for a short while before creating another bearish change of character to create a larger pullback. And once price gets closer towards the higher low, price creates another bullish change of character, and this time, price finally pushes through and breaks the previous higher high. Now, you may ask, Nick, why did price not go bullish from the first bullish change of character but the second one? This is a concept for another video, but it has to do with premium and discount ranges. So make sure to follow up with the next few videos regarding smart money concepts to put the pieces together. Now, how do we tell if price is going to reverse completely or whether it's just a pullback from a change of character? Unfortunately, just based off this concept change of character, you have no way of telling. The only way that it can be confirmed that it is a complete reversal of market structure is when a strong low breaks in an uptrend or when a strong high breaks in a downtrend. If these strong highs or lows doesn't break after retracing, there is a high chance a change of character happens, like in this example over here. Price will most likely continue the trend that it has been in the first place, which in this case is bullish. However, if a change of character plays out like how it's supposed to, it will look like this. Price creates a change of character with a break of this internal higher low, creating an internal bearish structure, bringing lower prices. Price proceeds to then take out the strong low that created the most recent high, confirming a trend change from bullish to bearish market structure. To be able to increase the confluence of the usage of a change of character so that it becomes a higher probability one, you can use it together with other concepts like number 1, multi-time frame analysis, number 2, supply-demand levels, otherwise known as order blocks, number 3, liquidity, number 4, premium and discount ranges. Now, I can't cover all of these concepts in one video as the video will be too lengthy and too difficult to digest, but I will be covering them in the next few lessons, so stay tuned. For the last section of market structure, we need to know the two different ways of mapping out market structure. Type 1, mapping break of structures using body candle closes. This is a conservative way of identifying where price is headed as it shows us that the market is providing enough volume to close outside of that structural point. When there's enough volume, there is a higher chance of the market moving in that specific direction with ease. Type 2, mapping out break of structure using the wicks. This is a more aggressive way of identifying where price is headed. The reason behind it being aggressive is that price closed as a wick, which indicates the lack of volume to push past that structural point. Therefore, it is riskier if you are taking trades using the wicks to label your break of structure. Personally, I use the body candle closes to mark my structure breaks, as I prefer to take less trades and higher probability ones. Sometimes, less is more. Now, let's hop onto the charts and mark out some examples of market structure so that we can train our eyes to see them clearly. Here on the 15-minute Euro-US dollar chart, price has created bullish structure, creating higher highs and higher lows. Notice how when I mark my structure, I ensure that a body candle close above a high or below a low is used. This gives us clear indication of the market direction, so we don't get stopped out of the market so easily when trading. If we look at what price did at the very top, price created a higher high followed by a change of character, breaking the most recent higher low with a body candle close. This tells us that the market is about to change direction from bullish to bearish. So that means we can look for sells. And what did price do over here? Price retraced back up to the 15-minute order block. For those of you guys here that are new that don't understand what order blocks are, I will do a video about that in the future. But basically, this is an area where price can potentially sell from. Price reacted off the order block and respected the swing high, not breaking above it, resulting in a dump, creating bearish break of structure. As you can see, the cycle continues and price continues dropping all the way lower. In this specific scenario, a change of character created a pullback in the markets, which followed through and became a complete reversal in the market direction. Let's take a look at a different scenario where change of character happens on the lower time frame. Initially on the 15-minute time frame, we can mark out our break of structure once this candle closes with a body candle above this previous high. So this tells us that we are currently looking at bullish price action, and our protected low is the lowest point in price created before breaking the high, which is over here. As price starts to retrace, we can hop down one time frame towards the 5-minute time frame. Over here, we can see that price has created a change of character to indicate a potential reversal. However, shortly after, price created a bullish change of character, which gave a fall signal before continuing to give another bearish change of character, testing our protected low. As price inches towards our protected low, a bullish change of character formed. This can be used as a potential entry to take buys and capitalize on the move higher. In summary, market structure is denoted by your highs and lows in the market. It tells you when price is bullish or when price is bearish. Change of character is a good concept that you can use to identify potential pullbacks in the market, and also can be used as a confluence to ensure that your trades are in the same direction on multiple different time frames. I personally practice market structure using mainly body candle closes to ensure that I only take high probability setups in the market, so you should practice that too. What do you personally prefer, wicks or bodies? Type it down in the comments so I know your opinion. There's no right or wrong in this scenario, it's just personal preference. Now, if you enjoyed the first lesson of SMC concept series, make sure to type series down in the comments and why you want to see more of this type of videos, so I know that you have actually gained value from this. If you're someone new to trading and needs our guidance on your road to profitability, join our free Telegram group with close to 43,000 members. We share free signals and educational content on a daily basis. To join, click the first link down in the description below, where it will lead you directly to our Telegram group. Don't forget to like the video and subscribe to our YouTube channel to keep updated when we upload a brand new educational video every single week. Also, click on the bell notification as we go live every single day, 2 times a day, during the London and New York session, so do not miss out. I will see you in the next video. Nick signing out.